Okay guys, welcome back to the channel. So it is the beginning of a fresh month, and that means it's time to go back over the previous month and see how the portfolio did. So as a whole, we're down 3% over the past month, and at the same time, the S&P 500 is down only 1.5%, and the QQQ is down 3.86%. So we're a lot closer to the QQQ in that respect. If we take a look at the individual sections over the past 1 month, we can see that the decline, of course, is led by my growth assets. Income assets, which include Divo and Jepi, have performed the best, and then the S&P 500 and xyld are somewhere in between. Now, to quickly touch on my growth assets, of course, these have been performing very poorly, but I plan on holding these for the long term. You guys might disagree with me and say these picks are awful, especially the ARK Innovation Fund, but I have to say, I think when the market eventually recovers, which it will, it always does, these are the names that are going to bounce back the fastest. In fact, I think today is a little taste of what's to come. So of course, overall growth is way down, but today growth is the only thing in the green, up 1.2%, and everything else is down. And my belief is that once this economic cycle is over and we get into the next one, which is a bull market, things look good again, I think growth assets are going to make up for many of these losses. Okay, but the main point I want to discuss in this video is my monthly income generated, because regardless of what's happening with the overall stock market, dividends persist, and that's one of my favorite things about them. And when it comes to my dividend income, I have 4 primary sources: Divo, xyld, jepi, and BST. So beginning with Divo, in terms of its price action, over the past 1 year, it's actually been performing pretty well, and it's essentially flat. And over the past 30 days, it is down 0.73%. The current dividend yield is 4.73, and they just paid a monthly dividend of 14 cents per share. And when it comes to this amount, I have to say it hasn't really been growing that much, and that has been a disappointment of this ETF so far. But I'm not giving up on this ETF by any means. As we're going to see in a second, the overall performance still is very excellent, and I think the dividend growth will eventually catch up. Next up is xyld, and of course, I use this in combination with the S&P 500. In fact, if I come back to my portfolio, here is how I have it set up exactly. Now, I'm sure a lot of you guys are probably wondering why I don't invest in xyld, which is the single ETF version of what I've done here. And that's simply because by manually recreating this, I have more control over it, and xyld isn't listed on M1 Finance yet. So using xyld for now, over the past 1 year, the price action is down 8%, and over the past 1 month, 3.21%. And if we switch back to xyld, the performance is pretty similar. But taking a look at the dividend data for xyld, the yield is almost 12% currently. And just yesterday, they paid out a monthly dividend of 44 cents per share, which is a little bit less than the previous couple of months, but it's still above the long-term average. And I've explained this on the channel before, but xyld, in combination with the S&P 500, is currently my favorite combination. You get fantastic broad market exposure to the growth of the US stock market, and xyld generates income off of it, which is especially useful during times like this. But my next income play is jepi, and they use ELNs to generate this income, which is a little bit different than covered calls, but ultimately is a very similar strategy. Also, the vast amount of the assets are invested in US equities. So it's a hybrid ETF that's going to give you great growth and income potential. And over the past 1 year, it's down 3.73%, and over the past 1 month, 2.28. But jepi also has an extremely high dividend yield of 10.82%. And in a couple of days, they're going to pay out a monthly dividend of 51 cents per share, which is the second highest on record. And then finally, I have BST, which is a closed-end fund, and it's focusing on growth and technology stocks. So of course, over the past 1 year, it's been getting slaughtered, down 33%, and over the past 1 month, 2.77, which is a lot better, especially in comparison to the other funds we just mentioned. In comparison to the others, the yield here is pretty modest at 8%. And being that this is a closed-end fund, they have managed distributions, which currently sits at 25 cents per share. And when it comes to BST, of course, the price performance hasn't been good lately. I don't blame them for that. I'm going to keep my eye on the managed distribution and make sure it doesn't get cut in the near future. In fact, I would love to see them grow the dividend pretty soon as an indication of the overall health of the option strategy here. And for reference, let's take the price action of all these ETFs and stack them on top of the S&P 500 over the past 1 year. So beginning with Divo, this is what it looks like against the S&P 500. Next, let's add xyld. This is how it looks in comparison, followed by jepi. Here is the corresponding performance. And finally, BST, which by no doubt is the lagger of the bunch. But I'm going to quickly input the same data on a total return chart and see how the data changes. So including the return from dividends, you're going to notice that now each and every one of these ETFs does better than the S&P 500. And that's the true power and magic of dividends and reinvesting. So in terms of my physical dividend payments, 3 of the 4 funds have paid their dividends so far. Beginning with BST on the 31st of May, they paid me $29.60. And again, all of these are monthly dividends. On that same day, Divo paid out $23.50. And the next day, June 1st, xyld paid me $36.44. These are beginning to get quite meaningful, and as always, they get immediately reinvested back into the market, especially during a downturn like we currently have. But my largest dividend payment is by Jepi, and that is yet to come in. But luckily for us, it's very easy to calculate what your dividend payment is going to be. All you have to do is take the declared dividend amount and multiply it by your share count. So for the month of May, they're paying out 51 cents per share. I have 100 shares, so that's going to be a dividend of $51. So that means overall for the month of May, I received about $140 of monthly dividend payments. If we go ahead and add that number to my spreadsheet here, we can see that it's actually more than last month, and overall it's keeping pace with my growing average over time. So that's what's going on with my portfolio. I'm taking all of these dividends as well as new deposits, and I'm aggressively buying every time the market has a dip, because I'm quite bullish overall the market's going to recover and be just fine within a couple of years. That's not to say that in the short term it can't go any lower, but to me that's all just new buying opportunities. Although I did just conduct a poll on the YouTube channel asking you guys, what do you think is more likely? That inflation starts to move lower and there's a soft landing in the economy, or inflation remains high and there's an economic recession? And it seems like a lot of you guys think the latter is a lot more likely. But I have to say, I disagree. Call me an optimist, but I think the market is going to do fine, at least long term. But that's it for the video. Hope you guys enjoyed. If you did and you're still watching, I appreciate a like on the video. Go ahead and subscribe so you don't miss any future content, and I'll see you guys in the next one.